Hi everyone, this is a technical analysis on EURUSD. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected, with basically no change to the statement. Fed Chair Powell stressed once again that they are proceeding carefully as the full effects of policy tightening have yet to be felt. The recent US CPI missed expectations across the board, bringing the expectations for rate cuts forward. The labor market is starting to show some weakness, as continuing claims are now rising at a fast pace, and the recent NFP report missed across the board. The US consumer confidence and University of Michigan consumer sentiment continue to fall. The latest US ISM manufacturing PMI missed expectations by a big margin, followed by a disappointing ISM services PMI, although the latter remained in expansion. The recent US retail sales beat expectations, while the US PPI missed forecasts by a big margin. The recent Fed speak has been leaning on the hawkish side, but last week's inflation report pretty much confirmed that the Fed might be done for the cycle. In fact, the market doesn't expect the Fed to hike anymore. In Europe, the ECB left the interest rates unchanged as expected as the central bank has ended its tightening cycle. President Lagarde highlighted the weakness in the Eurozone economy and reaffirmed that rates will make a substantial contribution to curbing inflation. The recent Eurozone CPI missed expectations on the headline figures, but the core measure remained unchanged. This is not likely to change the ECB's stance anyway. The labor market remains historically tight, but the unemployment rate recently ticked higher. The recent Eurozone PMIs missed across the board as the economy continues to struggle. In fact, the market doesn't expect the ECB to hike anymore. Now, on the daily chart, we can see that Euro USD has reached the key swing level at 105.0950 after an incredible rally following the miss in the US CPI report. The price is now a bit overstretched, as depicted by the distance from the blue 8 moving average here. In such instances, we can generally see a pullback into the moving average or some consolidation before the next move. On the 4-hour chart, we can see that this latest leg higher into the swing level is diverging with MACD. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, the sellers are likely to step in here and target a drop into the trend line. On the 1-hour chart, we can see that the pair is trading inside this rising channel, and we can expect some aggressive buyers leaning on the lower bound of the channel to keep charging higher. From a risk management perspective, though, the buyers will have a much better risk to reward setup around the 10830 level here, where they will have the confluence with the daily blue 8 moving average and the trend line. If the price breaks, in fact, if the price breaks below this lower bound of the channel, we can expect the sellers to pile in and target the 10830 support. This week is pretty empty on the data front, with the US on holiday for Thanksgiving Day in the final part of the week. Today we have the FOMC meeting minutes, but it's unlikely to be market moving given that it's 3 weeks old data. Tomorrow we have the US jobless claims report, which is probably going to be the most important release of the week. On Thursday we have the Eurozone PMIs, while on Friday we conclude the week with the latest US PMIs.